Hello and a very lovely good evening once again from here in Delhi, and hope as always that each one of you are absolutely fine. So today in this particular session we have decided to actually discuss some objective questions, and let's have a look how far you have prepared your Ind AS. And logically, actually, if you are old course student, honestly speaking, you should stress more upon the existing accounting standard rather than Ind AS, simply because if you happen to look at your past two attempt papers, the greater stress and greater weightage is given to the existing accounting standard in comparison to the Ind AS. But still, I have a hunch. Now, Institute will learn at least that they should now go for Ind AS, and some objective question from Ind AS should be tossed off, even though they might be very simple. But I have a hunch that this time Institute will go for some sprinkling of Ind AS, correct objective questions or MCQ based questions upon Ind AS, although they may not be very tough, provided you have gone through Ind AS quite well, at least superficially, if not very deeply. So let's have a look over this. How many Ind AS are there in India till at this particular moment? Your answer should be 41, correct? And secondly, income tax comes under, if I'm going to talk about from the perspective of the Ind AS, which Ind AS applies to income tax? As far as existing extended is concerned, AS 22 applies to income tax, but that is with related to existing accounting standard. But as far as Ind AS is concerned, your answer should be Ind AS 12, correct? And you have seen actually that under Ind AS 12, if we have gone through Ind AS 12, in order to compute the deferred tax and deferred tax liability, we adopt balance sheet approach, correct, where we compare the carrying amount and the tax base, if you remember. Impairment of asset is covered by which particular Ind AS? Your answer should be 36, impairment of asset. Basically, under impairment of asset, what we do? We take the carrying amount of the asset, then we compare it with the recoverable amount to see to it that whether there is any repairment has taken place or not, correct? So, this is your impairment of asset. Then as far as intangible assets are concerned, intangible assets comes under Ind AS 38, correct? Intangible asset under existing standard is covered by AS 26, under AS 26, yes, exactly, and under Ind AS that is covered by Ind AS 38. Is it clear to you or not? So, now, GAAP, GAAP stands for, of course, Generally Accepted Accounting Principle. That should be your answer. Whether financial reviews, now this is an interesting question. Let me see actually whether you are able to give the answer to it or not. Whether financial reviews by management, environmental reports, and value-added financial statements are outside the scope of international financial reporting standards. We may tend to say no, because so far there is no particular standard with respect to management reviews, environmental reports, or value-added statement. There is no particular standards. So question is asking whether financial reviews by management, environmental reports, and value-added statement are outside the scope of international financial reporting standard. So answer should be, actually we may tend to say no, but your answer should be yes, because there is no particular standard actually right now for this. But at the same time, we should also supplement our answer by saying that these are still in consideration. However, because these are objective questions, so we may have to say yes. Now, what is the term used to describe the time between the acquisition of assets for processing and their realization in cash? You are well acquainted with this particular term, correct? Suppose today I am going to acquire a particular asset. The period which will lapse before this asset can be turned into cash, that particular period is known as operating cycle, correct? And similarly, which section of an annual report do IFRS apply to? Now, if you have seen, and as a professional student, you must see annual report of particular companies. And if you will see an original annual report, generally it contains in between 40 to 50 pages, to be very honest with you. In many cases, you'll find that annual reports are comprising of 40 to 50 pages, correct? There are different sections, different commentaries. Some section will be related to management reports. Some section will be related to environmental reports. Some section may be related to some other things. Correct? But question is asking you, under the annual report, which is the section to which IFRS apply? And we know that IFRS or Ind AS apply to only what? Financial statements. So your answer should be financial statements. How many formats are permitted for income and expense item under Ind AS 1? Now under Ind AS 1, actually there are two formats, correct? Under how many formats are permitted for income and expense under Ind AS 1? Actually, answer instead of two should be one, because in India, because internationally there are two what we call statements related to it. One is known as what we call profit and loss account, and other one is other comprehensive income, and they are prepared separately under international accounting standard. But in India, we prepare only profit and loss account. So one statement only, but upper part is known as, and as you know, a statement of profit and loss account, and lower part is known as what we call other comprehensive incomes. Is it clear to you or not? So this is the thing which you need to take into account when you answer this particular question. So in India, actually, there is only one format. You can say that way around. However, internationally, they have divided into what we call two separate sections. However, the profit and loss account in India now is divided into two sections. You can say so. Answer should be one in case of Ind AS 1. Where should extraordinary item appear in entity's statement of comprehensive income? Nowhere. In comprehensive income, we never write what we call other comprehensive income. You need to understand this also. Now, as per Ind AS 1, when is offsetting is allowed? When is offsetting is allowed? Generally, offsetting is not allowed, to be very honest with you, but it is allowed only if it is permitted by the relevant Ind AS. Then only you can offset it. Otherwise, you can never ever offset any particular item. Answer should be C. Which of the following is not a component of a statement of financial position? A statement of financial position, that is actually balance sheet, which is not a component of balance sheet, you can say so. Non-current asset is component of a balance sheet. Retained earning is also a component of balance sheet. Deferred tax is also a component of balance sheet. So only alternative we are left up with is C. So C should be your answer. Correct? Which of the following is not requirement in the financial statement under Ind AS 1? When we prepare the financial statement, out of these four, which is not needed? Question is asking you. Now, if we have gone through Ind AS 1, Ind AS 1 clearly states that every financial statement must carry the name of the entity, must carry the accounting period for which the financial statements are being drawn, and of course the presentation currency. So that means in this case our answer will be chairman's commentary on the performance, because this is not the requirement. Under Ind AS 1, how often should financial statement be prepared? We have gone through Ind AS 1 and we have seen that as far as frequency is concerned, annually, at least annually, the financial statements must be drawn. So your answer should be A. Correcting the recognition, measurement and disclosure of amounts in financial statement. Correcting recognition and measurement and disclosure of amount in the financial statement as if a prior period item had never occurred. So when we correct a prior period item, that means some mistake, some error had taken place in the earlier years, and we are rectifying it retrospectively. Retrospectively means right from the date and the point of time when that particular error had occurred. Suppose an error had taken place 4 years back and it is detected in the current year. Of course, it will be known as prior period item. Now the question is that in order to rectify, if I will adopt this approach, that I should actually correct it from that point of time when that particular error occurred, that means 4 years back. So when I will correct it in this manner, it is in accounts or in accounting language is known as retrospective restatement. Retrospective restatement. So when we do retrospective restatement, indirectly it means that error has never ever taken place. So question is asking you that if you are going to correct your prior period item error in a manner that as if that particular error has never ever taken place, so what will you call it? You will call it retrospective restatement. Under Ind AS 16, how often the useful life of an asset should be reviewed? Correct. Under the revaluation topic of what we call Ind AS 16 related to property, plant and equipment, we had seen over there that at least each year, financial year end, we need to review the life of an asset. Under Ind AS 16, if an asset is idle, question is asking you, should depreciation be paused? Or depreciation for the entire period does not apply? Depreciation is ignored? Or should we continue what we call depreciating the asset? Obviously, once you have acquired an asset, whether you are using it or not, it is losing its value. Suppose today I am going to purchase a car and I do not use it for next 12 months. That doesn't mean that car hasn't depreciated. I cannot sell the car after 12 months at the same price at which I got it. So quite obviously, depreciation always takes place with the passage of the time. So depreciation will continue. Your answer should be D. Is it clear to you? Which of these is an allowable cost under Ind AS 16? Under Ind AS 16, which of these is an allowable cost? General overheads, professional fees. We know that professional fee is generally considered as an allowable cost, correct? Administrative expenses, general overheads are also given to you, but professional fee will be considered as an allowable cost. You are going to consider it when you are going to actually compute the cost of the Ind AS 16. When we say allowable cost, what does it mean actually? It means we are capitalizing this cost because ultimately in the form of depreciation, we will get allowance for the same. So question has asked you in a very tricky manner because ultimately a professional fee will be added back to the cost of the asset and ultimately I will charge depreciation on it. So I will recover this cost, correct, in the form of depreciation later on. What is the net amount an entity expect to obtain for an asset at the end of the useful life? Obviously, your answer should be residual value. I need not require to stretch here. As far as question number 20 is concerned, under Ind AS 16, which of the following is not allowable as directly attributable cost of the machine? We know that when we purchase a machine, the delivery expenses are added, site preparation expenses are also added, estimated dismantling costs are also added. However, initial test costs are not added, correct? So initial test batches or initial test cost will be your answer to this particular question. 21. What is the amount of an asset could achieve if sold between knowledgeable willing parties at an arm's length? Now, this particular phrase, at an arm's length, we use so often in accounts when we generally measure the fair value. Under Ind AS 13, I have already talked about this particular fact, so quite obviously it will be termed as fair value. 22. Which of the following is covered by Ind AS 16 property, plant and equipment? There are many items given. Biological assets, in fact, it is an exception because biological assets fall under what we call Ind AS 41, that is agriculture. Exploration asset, actually exploration asset is not part of your course, correct? That is related to Ind AS 6, Ind AS 106 in fact. Assets held for sale is covered by Ind AS 105. So which of the following asset is covered by Ind AS 16? Obviously now my answer will be office building. 23. Which of the following disclosure is not required when an asset is revalued? When an asset is revalued, the standard is very clear, especially Ind AS 16 is very clear that we need to disclose the revaluation surplus, the effective date of revaluation, and whether the valuer was independent or not. We have to, because it is clearly written that valuation should be done by an independent valuer. So that means whether valuer was independent or not, that need to be reflected. And name of the valuer is not needed. So your answer in this particular case will be option A. Under AS 16, which two subsequent accounting treatments are allowed subsequently to initial recognition? Because we have seen that under Ind AS 16, initially the asset is recognized at cost. However, subsequently, we can recognize the asset either at cost or at revalued model. So this should be your answer. When an asset is sold or disposed of, so whenever we are going to sell the asset or dispose it off, obviously there will be some gain or loss. The question is asking where that gain or loss should be recognized. Obviously, your answer should be profit and loss account. Correct? Question number 26 actually is related to the fact that which of the following is not a component of an asset? Component of cost of an asset. This should be easy to answer because purchase price is considered as part of the cost, import duty is also, and compulsory future dismantling cost is also considered as part of the cost. However, refundable taxes, any sort of taxes will not be considered as part of the cost. Your answer should be B. When an item of property, plant and equipment is revalued, what should be revalued? Now, under revaluation, we have seen that whenever we are going to revalue an item of property, plant and equipment, we should not revalue it separately. In fact, we should revalue the whole class to which that particular item of property, plant and equipment belongs to. So your answer should be the whole class of asset to which it belongs. 28. Which of the following is not an asset that falls under the scope of Ind AS 16? Now there are lots of items given. Let me move up by taking the option D. Asset held for production or supply of goods and services. In fact, that is the definition, one part of the definition of what we call asset. Asset expected to be used for more than one period. Tangible asset. In fact, all these three items are part of the definition of the asset as per Ind AS 16. However, asset held for sale in normal course of business, that is part of inventory. That is not part of Ind AS 105. These asset held for sale in normal course of business. So that is considered as part of what we call Ind AS 2. Is it clear to you? That is known as inventory. So your answer should be A in this particular case. How should an asset be recognized? Next question. How should an asset be initially recognized in financial statement? So whenever we are going to acquire an asset, so how should I recognize it? Just a moment ago, I told you that initially we recognize the asset at cost, so your answer should be at cost. Question number 30, where is the amortization of an intangible asset is recognized? You are going to purchase an intangible asset today. Obviously, with the passage of the time, at every accounting period, you will have to write it off some part of this particular item known as amortization. Quite obviously, the amortization part is a loss to us. It will be taken to profit and loss account, so your answer should be P&L. 31. Which of the following is not required to capitalize development cost under Ind AS 38 intangible asset? See, as per Ind AS 38, which deals with, of course, intangible asset, and we have gone through asset recognition criteria over there, isn't it or not, if you remember? And under the asset recognition criteria, we had seen that it must be technically feasible. The entity intends to sell the completed intangible asset. Entity can demonstrate that asset will generate. That means all these are part of asset recognition criteria. And if asset recognition criteria is met, then quite obviously we are going to capitalize the cost. However, if commercial feasibility for the asset may be uncertain, that means commercial feasibility means we are not very sure that commercially we are going to get return out of this particular what we call development. So we should not capitalize it. So your answer should be A. An intangible asset with a finite useful life should be amortized over. Now, if there is an intangible asset and it has got some definite life, finite means some definite, some specific life. So how should I amortize it? Suppose today I am going to acquire a patent and it has a life of 8 years. So generally, in case of what we call intangible assets, the expected useful life is considered as the period over which that particular item should be written off. So expected useful life should be your answer. What are intangible assets if I am going to ask you? Intangible asset, in the very first sentence of our notes, we have written over there that intangible assets are non-monetary assets without physical substance. 34. Which of the following is an intangible asset under Ind AS 38? Out of these things, only patent rights can be considered as intangible asset. Because market share, customer loyalty, technical knowledge, training, correct? These cannot be termed as intangible asset. Training, customers, loyalty, market share, etc. So they cannot be considered as intangible asset. Your answer should be patent right. Which of the following measurement models is not permitted for the subsequent measurement of intangible asset under Ind AS 38? Honestly speaking, under Ind AS 38, you can use revaluation model, fair model, cost model, but capital asset pricing model, that is generally used to this is term generally used under financial management, correct? So your answer should be D in this particular case, because this model is not applied or not permitted by Ind AS 38. What is the correct treatment for all eligible borrowing cost under AS 23? If any cost which is eligible borrowing cost, it is given to you. If it is a eligible borrowing cost under AS 23, it should be capitalized. Correct? Which of the following is not a qualifying asset under Ind AS 23 borrowing cost? We have seen a qualifying asset is generally one which takes quite a long period of time before it matures into a full-fledged asset. We can say so, and many among us actually consider 12 months as a period. Correct? But it is something which is related to judgment of the management. Manufacturing of plant, it requires a long period of time, no doubt about that. Made to order inventory sums, quite obviously it will take a long period. Investment property, obviously it will take a long period. So which of the following is not a qualifying asset under AS 23? We can say that in this case A, B and C all can be considered as qualifying asset. But mass-produced inventory cannot be considered as what we call qualifying asset. Is it clear to you? So mass, that means any inventory which is produced on a mass scale, it cannot be considered as intangible qualifying asset under borrowing cost under AS 23. 38. Which of the following items should be disclosed as per the requirement of Ind AS 2? Ind AS 2 is related to inventories. Correct? The last paragraph of our notes deals with the disclosure aspect. So if we will look into it, you will find that which of the following items should be disclosed. Out of all these things which are given over there, only first one actually can be considered that it should be disclosed, because carrying amount of inventory placed as security for liability. However, we need not require to disclose the average lease time period, list of major customer to whom the inventories have been sold, or average holding period of inventory. All these things are irrelevant. However, what else we need to disclose? For example, we need to disclose work in progress, we need to disclose what we call finished goods, raw material, etc. Which of the following items are excluded from the scope of Ind AS 2? Which are the things which you are not going to include under what we call Ind AS 2? Inventories that are stated at realizable value, of course, it will be included. Asset held for sale in the normal course of business, we just saw, it will be included. Inventories whose fair value is more than cost will be reflected. But agricultural produce at the point of harvest, it will be considered, it will fall under Ind AS 41, which is related to agriculture. So it will not fall under Ind AS 2. Under Ind AS 2, fixed production cost should be allocated to the items of inventory on the basis of normal production. We have done so many times such question. It should be very easy for you. Which of the following cost models is not permitted under Ind AS 2? Under Ind AS 2, which of the method is not permitted? FIFO method is permitted, actual cost method is permitted, LIFO, simple average is also permitted. How is not permitted? Question is asking not permitted. So we may say that in this case our answer should be LIFO, because LIFO is not permitted, last in first out. Which of the below mentioned formula are covered by Ind AS 2? FIFO, LIFO, weighted average, but this question is not fully printed, so I cannot answer it. I'm sorry in this case. 43. because formulas are not printed over here. Which of the following costs must be expensed under Ind AS 2? Which of the costs should be expensed? That means out of the cost which is given to you, which of the costs should not be capitalized, which should not be made as part of the inventory? Selling and distribution overheads incurred in the ordinary course of business. Obviously, we can never make them as part of the inventory, whereas all these items will be made as part of the inventory. So your answer should be A. 44. How are unallocated overheads treated as per under Ind AS 2? Unallocated overheads. You might have incurred some overheads, let us say 1 lakh worth of overheads. And out of 1 lakh worth of overheads, let us say 70,000 worth of overheads you have allocated to the inventory cost. So what about the unallocated portion? Obviously, the unallocated portion of the expense will be recognized in the profit and loss account. So recognized as an expense in the period in which they are incurred. 45. After convergence of Indian accounting standard with IFRS, new standard issued for preparing the cash flow statement is Ind AS 7. Correct? Under Ind AS 12, temporary difference is defined as the difference between the carrying amount of an item that item revalued amount. The difference between the carrying amount of an item and that item is revalued amount. Under Ind AS 12, temporary difference is defined as the difference between the tax base of an item and that item carrying amount in the balance sheet. Correct? But that is not the case. It cannot always be, because that depends upon the fact that whether our tax base is more than the carrying amount or not. B, the difference between the carrying amount of an item and that item's fair value less cost to sale. Again, this cannot be the answer. Now we will see here the difference between the carrying amount of an item. Suppose carrying amount of an item is 100 as per the balance sheet. And this item is revalued. And this item is revalued at a particular figure, let us say 150 or something. Because under income tax, revalued figures are never shown. Is it clear to you? So it will give rise to what we call differences. So that is why in this case, this particular answer, it will give rise to temporary differences. So that is the reason in this particular case, your answer will be C. 47. Activities that result in changes in the size and composition of the equity capital and borrowings of an entity are called as financing activities, quite obviously. Because they cannot be considered as operating activity or investing activity. So your answer should be financing activity. 48. The principal revenue producing activities of an entity are called as operating activities. And similarly, cash payment to and on behalf of the employee is an example of operating activity. And which of the following is not a heading for cash flow under Ind AS 7? Cash flow from normal activity, these are not any heading. The headings are operating activity, investing activity, and financing activities. So 50 questions in this particular session, 50 objective type questions we have covered. I have framed many more questions, but that I will discuss in the next session. And besides Ind AS, we have framed some objective question of accounting standard also that I will discuss. So in the upcoming series. So this will help you a lot. So you need not require to do very deep study of Ind AS, but this sort of superficial study you should do, because objective question, in case if tossed up in the examination from Ind AS, at least you should be in a position to do that. But I'm sure that in the upcoming examination, not only some but many questions will be of objective type from Ind AS. So on such note, we finish up this particular session. Looking for your feedback that whether these sessions are useful or not. So in case we find that you are getting benefited out of this session, we'll continue these sessions then. So it's okay, time to say goodbye.